Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of April the 23rd, 2018. Now, to get started this week, we're going to begin where we always do with the US dollar index. Now, the dollar index has really made a turnaround, a bullish move on a bit of a hiccup in gold actually. So we'll talk about that in a minute, but right now the dollar remains locked in the primary channel. Now, specifically, that primary channel resides between approximately the 90.55 area, and the lower side of that in the overall range is 87.80, but we're finding pretty strong support at 88.60, and this previous week, again at the 89 level. That's triggered a triple EMA cross from VantagePoint, and again, when we look at the indicators a little bit closer from VantagePoint, the medium term crossing over the long-term predicted difference right here, basically at the beginning of last week, where the dollar started to basically slowly turn around. Now, my concern here, and I have a significant concerns about the US dollar, is so many political issues, global issues. I'm not sure the dollar can break through 90.60 and start advancing higher. The predicted RSI from VantagePoint, you can see that I've put a trend line in here, and we're likely going to fail here towards the end of the month. Now, we could see further dollar strength, but for a breakout in the dollar here, guys, what we need is a complete breakdown in gold below 1300. Now, there is a makeshift sell signal on gold right now from VantagePoint, but again, I think that a lot of this signal is corrective in nature. Now, we've had repeated bull failures. Again, another concern I have, that most recently we have not been able to get back up above this critical vantage point, above this breakout point, and a new double top is formed at about 1370. So that is absolutely a concern here. But again, my optimism remains heavily guarded on further US dollar strength, given the backdrop of the fundamentals. Now, if we do see a bigger move up in the dollar, that is going to put additional pressure on the equity markets. We can see that we have a very clear sell signal from VantagePoint, the medium term crossing the long-term predicted difference to the downside. One of the most powerful reversal signals in the VantagePoint software. As the market was moving higher, the VantagePoint medium-term trend against the longer-term trend is weakening. The neural index is now on board, but we are sitting at a critical breakout level on the S&P. 2670. We've closed at 2671. I don't anticipate a big move in the equities to the upside next week. If anything, we're likely to see further downside. However, we do still have very firm oil prices here. If oil continues to advance, we could see the equities recover, but that same signal that's on the S&P 500, the major intermarket correlation, oil to the equity markets, it's showing weakness in oil also. So there's some definite problems here. Now, when we look at that move lower in gold, that was absolutely the trigger to pull Euro US down. The intermarket correlation between between oil and gold is about 90%. They both go up and down together here. So if gold does come under heavy selling pressure, then that means the euro will also. Now, I'm not really seeing a big sell signal. We've had a big move on Friday, but again, Friday is false. Usually it's not a true price here. So I would be a little bit cautious of getting aggressively short, as we're still primarily in the overall range between 120, 160 and this upper area here in this 125.45 area. So for next week, we've got the ECB and Draghi, so it's going to be a slightly bearish week for the euro, which may push US Swiss franc higher, but the only problem is, if the equity markets do sell off, they're going to pull. That's going to put money into the yen and into the Swiss franc and potentially even the dollar. But my optimism, again, that the Swiss franc is going to sell off to any big extent here remains, again, heavily guarded. The Swiss franc, like the Japanese yen, has been a very strong currency. Now, the other issue we have, the VantagePoint long-term pivot area at 96.08, we're closing the week 97.45. So the further further we move away from that critical vantage point level, the more likely it is we're going to retrace to it. Now, we're sitting at 89.4 on the predicted RSI. We're absolutely moving into overbought territory. Now, with the pound dollar, I talked about this extensively in last week's Forex Weekly Outlook, and I suggested that we would get a slight push above the double top here, and then we would crash. Now, the Bank of England, is actually assisted with this, so I can't take full credit for the sell-off. Governor Carney definitely helped me out with this one, but again, the market was already moving prior to Carney making those comments about the rate cuts, or the rate hike, or lack thereof, and Brexit. So all of that was a concern. But again, looking at that vantage point medium term crossing the long term predicted difference, that's how we measure the medium term trend against the longer term trend. And we can see that basically there is absolutely zero lag in this particular indicator. As the medium term trend crossed the long term trend in the opposite direction to the downside, that triggered basically almost a 400 move to the pip to the downside. And again, we knew this ahead of time. So a very, very good move here. But I will point out that the overall view on sterling is positive, in my opinion. So let it correct lower. Maybe we'll get lucky and get down closer to this 137 area where we would be buyers. But there will likely be pressure on the downside. Now, another thing that could help out the British pound, of course, is if the euro sells off. Now, what I mean by that is if the Euro-Great Britain pair moves higher, then basically, or moves lower, then that will help the British pound. So we'll keep an eye on that pair next week also. But right now, there is a bearish tone for sure. Now, with dollar yen, guys, we've basically finished the week almost exactly where we started in this double sell zone that I've identified here using these swing tops. The only way we're going to take the overall pressure off the downside with this pair, guys, is if we can break through the 80-40 area, 80-30, stay above this area and break free and clear from that. Now, the VantagePoint Neural Index and the predicted differences are saying that that is possible. Our key pivot area now starts at 107.40 and goes all the way down to 106.97. So longs carry a very slight edge while above this area, but if the equities sell off, this pair is absolutely going lower with those equities. As we move into our commodity currencies, US CAD has reversed higher, and again, that medium term crossing the long term predicted difference, combining it with the Neural Index and looking at the additional crossovers from VantagePoint, our short term crossover and our medium term crossover clearly called this move. But for basically the CAD, if oil continues to move to the upside, commodities move higher, that's going to help the Canadian dollar. So we'll watch this area. But right now, I don't anticipate next week that this pair will advance much past the 129. We'd be lucky to get to 129 next week. Now, with our additional commodity currencies, Australia and New Zealand. Australia, a very good long trade, but we hit a wall up here again. We're turning lower. The VantagePoint indicators clearly warning of that. Now, our key pivot area on the upside, 77.30. We were unable to break through 78, the area I talked about last week, and we failed yet again. So we're likely going to come down potentially into the 76 area. We may even move a little bit lower. We've had a very bearish close at 76.68, but only a break of 76 or even the 75 area would take the pressure off the upside here, guys. So right now we are bearish, but this pair is highly correlated to equities and commodities. So if commodities and equities both move lower, the Aussie dollar will follow it. Now, that would also apply to the New Zealand dollar. The New Zealand dollar, the Aussie dollar, the Canadian dollar, all very similar in the way they move. So they're all weakening here together as gold and oil starts to back off. Now, some of this could be just profit taking also here, guys. A risk-on environment can't be ruled out as things seem to be calming down between the US and North Korea, so we'll see where that takes us. But right now, this pair is likely heading to the bottom part of the range at 71.40. But be cautious down around this area. If we get a turnaround signal from VantagePoint, we will see this pair moving higher. So we do have a tricky week next week, but with the weekly outlook, it does set us up for the week, identifying some critical levels for everybody to trade. So I hope everybody has a great trading week, and I look forward to talking with everybody next week. Thank you.